Hello, everyone, and welcome to the JCCS webinar covering some of the most significant provisions of the most recent COVID relief bill that was passed by Congress and then signed into law on December 27th. So for those of you who have attended our COVID relief webinars previously and the PPP webinars in the past, we're glad you could join us again. For those of you who are new attendees, we hope you get plenty of value for the 1 hour out of your day that you're going to be spending with us. I want to cover just a couple of housekeeping items before we get into the material. As always, we will be recording this session, and a copy of that recording along with the slides will be available on our website in a couple of days. It takes us a couple of days to render that and prepare it and get it ready to post. We will also be sending out a link to that recording in our e-newsletter when that's available, so you can take a look for that. We'll also be taking questions, live questions throughout the webinar as time permits. There's two communication sections there. One is the Q&A. We'd like to direct all material questions to the Q&A. That way we can monitor that, just a single location. There is also a chat function, but we like to keep that for any technical issues during the webinar. So filter all those questions to the Q&A section, please. We are set for 1 hour in time. Depending on the volume of questions, we might run over 5 or 10 minutes, but we will have to do a hard stop around 5 or 10 minutes after the hour. And then, of course, if there's a specific question that you just don't get answered during the webinar, please feel free to reach out to your JCCS contact or the person that you work with the most, or Jake, Aaron, or I, and we'll be sure to get those questions answered as soon as possible. With that, I want to do a brief introduction with our panelists. Got Erin Vukolich. She is our Client Advisory Services Team Lead within JCCS. Of course, most of you will recognize her from her participation in past COVID webinars, as well as our series on cloud accounting solutions. Jake Carter is a tax partner up in our Whitefish office. Jake also participated in all those COVID relief PPP webinars, and he's also done several standalone tax presentations. So no stranger to the webinar series. I'm Tony Van Orney. I'm our firm's Director of Audit and Accounting. I'll mostly be moderating today's webinar and then assisting with any Q&A questions that come in. Before we get started, just want to give this coming soon web slide. Based on the amount of content that we're covering today, we felt the need to push all the business and individual implications into a separate webinar. So take a look for that. That'll be coming soon. We'll post that through our e-newsletter as soon as we have dates and times set for that. So without any further delay, I'll turn things over to Erin.
Wonderful. Thanks, Tony. So we'll be covering a couple different things today. First, we're going to talk about the Families First Coronavirus Response Act and its extension and a little bit of renewal on some of the items. Then we'll move into the PPP, which then Jake will talk a little bit about. And then we'll roll back into the Employee Retention Credit because there are some pretty significant changes with that and how it works with PPP. So first of all, Families First Coronavirus Response Act. This came out way back in March. I know we had done a couple webinars talking about it, but once it was passed, it was kind of like, okay, that's done. Now we're really focused on the PPP. So what this act did is it provided emergency paid sick leave and expanded FMLA for certain employers as of April 1 and through the end of the year. There were different requirements for the use of the emergency paid sick leave and the emergency or expanded FMLA, and we'll get into those differentiations in a little bit. But as I said, started April 1st through 12/31/2020 originally, so it had been second, third, and fourth quarter. Now, the new act, the Consolidated Appropriations Act, extended the Families First Coronavirus Response Act portions through March 31st, 2021. So we'll see it still for quarter one. What it did change, though, is that now it's voluntary. You are no longer required to provide those benefits if you are one of those employers that were required to before. Having said that, if you are voluntarily providing those benefits, then you as the employer still get the benefit of the credit. As we've seen, that is reported on the 941. You get credit for the wages and the Medicare tax and any health insurance expenses that are associated with those emergency paid sick leave or expanded FMLA wages. So that credit is still available, and you still have those hours that you can pay out. It's important to note that the Appropriations Act did not renew the emergency paid sick leave, which is that 80 hours. And we'll go over a couple examples. It just extended those original 80 hours of that emergency paid sick leave. It also extended the expanded FMLA, but where that is different from the emergency paid sick leave is based on your FMLA calendar as an employer. You can have different FMLA calendars, either calendar year, or you can do a fiscal year, or you can do a year based on when the employee first leaves. So it's possible that you could have a renewal of the expanded FMLA if your FMLA calendar renews, like if you're on a calendar year. So like I said, we'll get into a couple examples here, but just note that even though the act didn't renew the hours, you could potentially have a renewal of that expanded FMLA, which is the 10 paid weeks. It also extended the benefits of the FFCRA to sole proprietorships and will be reported as an offset from self-employment tax. And I did hear when I just talked to Jake real quick, do you know, have we seen any forms yet on that, or are they still up in the air?
Up in the air.
Okay, that's what I thought. I had double checked last night, but just in case you read something earlier today having any forms, right now, we don't know what that's going to look like. I'm assuming it'll be some change on the self-employment tax form or another form, but we'll be finding out more. And you'll find from a lot of this stuff, we're still waiting on further guidance from the Treasury and the IRS. So let's talk about a couple examples. If you are choosing to voluntarily continue paying emergency paid sick leave, here's a couple examples of how it will work. So example one, we have employee A, full-time employee, typically works 40 hours a week. Back in April, they would have been entitled to 80 hours of emergency paid sick leave. And in this example, we're specifically talking about quarantining as directed by a healthcare provider. Let's say they didn't use any of those hours, any of the 80 hours in 2020. Well, if you're voluntarily participating in the act going into 2021, they would still have the full 80 hours available to them. As long as you voluntarily are participating, you would get the credit for providing those wages if they did need to go out, and any Medicare tax, qualified medical or health insurance costs as well. Now, example two is somewhat similar, except this employee used all of their 80 hours due to the childcare and school closures. So they used it for a different reason. Even if the employer in this case voluntarily continues to provide FFCRA benefits, they've already used the allowed 80 hours for the emergency paid sick leave. So then they would have to roll into the expanded FMLA. So hopefully that makes sense. Tony, Jake, any clarifications on that?
No, I think you got it right on the money.
Perfect. I did read my example a little wrong. Originally, I had said the 80 hours, they hadn't used any. In my example here, they used 36 hours of emergency paid sick leave in 2020. If they're voluntarily providing it, they would still have 44 hours remaining. And that can be used intermittently. So you can, if you pay someone to quarantine for 2 days, they got tested, they found out they're fine, they can come back. So you can have that intermittent pay on those part-time employees. Just remember, it's the average hours over the last 6 months.
Aaron, we got one question right off the bat. Is that paid sick leave at full pay or 75%?
It depends on the reason. So for your quarantining, you're directed to quarantine, you're caring for someone that is quarantining, it's at the full rate of pay, up to the cap of the $511 here. We have the caps on this screen. So that's at 100% of pay up to the cap. If it's for the childcare, daycare closures, then it's at the 2/3 rate of pay. And all of the per day and the aggregate, all of those are still the same. There's no change to that per day cap. I believe it is if you're out for one of the childcare or school closures, I think that evens out to be about $25 per hour. And I think for the other one, it's closer to 60 or 63. So if you have someone that's making an hourly wage over one of those, then you'll probably have to put the cap in. We had another question about intermittent COVID sick pay only allowed for certain reasons of the 6 options. I haven't read anything limiting the intermittent. We have been running as that it's fully allowed. Have either of you guys read anything different on that? Perfect. So should be allowed for any of these 6 reasons. Now, I will say the 6th reason here, the experiencing any other substantially similar condition, I don't believe that there was ever anything put out in response to this reason. We still have no clarification on that, as far as I'm aware. Feel free to jump in, Tony, Jake, if I'm missing something there. But they were supposed to issue some other substantial similar condition. We haven't had anything. Maybe with the new COVID strain coming, maybe that's what they were trying to reference. But yeah, so we still haven't really got any guidance on that number 6. So talking about example for the expanded FMLA, this employee full-time works 40 hours per week. They took the 80 hours of emergency paid sick leave for the qualified reason of daycare and school closure. And then they took 5 weeks of the expanded FMLA for the qualified reason of daycare and school closure. If the employer voluntarily continues to provide the FFCRA benefits, the employee is eligible for the remaining 5 weeks of the expanded FMLA for that qualified reason, the daycare school closures. The one thing we don't know and we're still waiting on guidance for is if someone starts their, let's say daycare school closures start at the beginning of March, are they going to then expand that and say, hey, since you took maybe 2 weeks of the expanded FMLA March, you get to continue using it into quarters 2 and 3. We've seen some questions about that. Since they did put a date of 3/31, it kind of tells me that we have to stop paying it then, but then they were really eligible for more. So kind of waiting on more information from that. We just need more info on the expanded FMLA. The emergency paid sick leave is pretty cut and dry, but the expanded FMLA is a little bit more frustrating, I would say, a little less clear. So we do have some exclusions and some exemptions. And I think this is an area that we really had a lot of confusion. There's a lot of bad information out there being shared about whether you're exempt or not. We've seen that, people asking us questions. If we were exempt, how do we fix it? The employees got UI, what do we do? So wanted to go over what the exclusions are specifically. If you're a private sector employer with 500 or more employees, you're excluded from providing the benefit. Some public sector employees are excluded, as well as healthcare providers or emergency responders. Having said that, we have seen healthcare providers be offering the FFCRA, and even though they aren't required to. So just something to be aware of. Business, nonprofit, or religious organizations with fewer than 50 employees may potentially be exempt from providing the emergency paid sick leave or expanded FMLA for childcare related reasons only. This is also an exemption which is based upon a decision tree. So I provided the 3 different decisions that you have to look at. Most of them are about the financial security of the business. So either there aren't enough workers to replace that employee's hours, or if that employee is so skilled or has a certain level of knowledge in the business that them not being there would cause substantial harm to the business, or if your financial obligations exceed any revenue coming in and you just can't afford to do it. So you would have to fulfill one of those, and it has to be made, the decision has to be made by an officer, someone with knowledge about the business. So the employee themselves might be able to, if they're in the position of that management leadership role, but for the most part, it should be CEO, COO, president, owner, someone in a decision or leadership position, or management or leadership position. As of right now, we've seen no exemption for providing the emergency paid sick leave for the quarantining reasons. The original act itself specifically listed out the childcare childcare due to daycare closures, school closures as the only reason for exemption. So what we've seen is a lot of people thinking, oh, I have less than 50 employees, therefore I'm exempt from all of it. And unfortunately, that isn't the case. In talking with the unemployment insurance division, there seems to be a couple different ways that you can correct this. You can have the employee pay back any UI that they got while they were out, and then you can pay them for the correct wages and file for the credit. We've had some people, the UI department, when I was talking to them, was like, well, you can just leave it if you want, as long as the employee wasn't double paid for that time. The UI department seems to be fine. And that was just a phone call that I had with them a couple weeks ago when I was asking about a specific issue. And they said that they're getting a lot of calls about this because there are a lot of people that thought they were exempt and aren't or weren't supposed to be exempt. So just a reminder, you may think you're exempt, but double check, see if you had anyone out on quarantine that you may need to pay, or just verify that they got unemployment insurance benefits for that time. And I think they can still file online. I don't believe there's any issues with filing back pay or anything for that quarantine time. Tony, Jake, did you have anything to add onto this?
No, we've got a couple of questions though before we move on to the next topic. First one is, can a half-time employee be paid 80 hours of emergency paid sick leave?
They should be paid the average of their past 6 months number of hours. Having said that, I don't know if anyone's actually looked at that. Like, I don't know if that's going to be audited or if they're going to come and ask questions about it. So if you did it in error, do you go back and fix it?
Agreed. That's how the act reads.
Yeah, but yes, agreed. They would only be eligible for their average hours over the last 6 months.
Yep. And then the other one is, if an employee who has tested positive has the capability to telework, but is too ill to work, are they eligible for emergency sick time?
I believe so, because they would be under a quarantine order, unable to go out or do anything or work anyway. And especially if they're too ill to work, then I believe they would be.
Absolutely. I think that too ill to work and the positive test are definite eligibility triggers. So
yeah, totally agree. So this is what happens to businesses that were closed by government order, like a bar or casino. Were they required to pay the employees under FFCRA? That depends on when the business was closed. So if it was closed before the people could be sick or anything or request anything. So if they're trying to, let me see, how do I word this? Let's say you had someone who was sick on April 15th and they had to quarantine for 2 weeks, but you were closed due to the governor's orders back on March 28th. That closure date would preclude you from having to offer those wages because you were closed ahead of time. So there is a section in the FAQ that for the Families First Coronavirus Response Act that talks specifically about businesses that were closed. So it really depends on the date that you were closed and when the people were, having to quarantine or stay home for childcare. So kind of depends. And we got a question about what FFCRA is, and it's the Family's First Coronavirus Response Act. It's just really long to say, so that's why we're accountants. We love those abbreviations. So FFCRA, and we'll probably continue to talk about that going forward. Also, the CAA is the Consolidated Appropriations Act, EPSL, EFMLA. We'll try to say the full name, but just bear with us with our abbreviations. I think the next screen is just about unemployment insurance. The CAA did extend the pandemic unemployment compensation to March 14th of 2021, restores the supplemental amount of $300 per week, which was decreased from the $600 that was happening in June, July timeframe. Also, the pandemic unemployment assistance allows individuals to receive benefits as of 3/14/2021 to continue through April 5th. So if you're filing back, you can still get that $300, but you need to file for the unemployment insurance benefit by April 5th. As long as the individual hasn't reached their max number of weeks, which is now 50 weeks over the 32 or 34. And the extension of the no waiting week for benefits has been extended as well, or it was extended through March 14th, same as the extra $300 per week. And when I was talking to unemployment insurance people, they were very, very helpful. They understand that there's a lot of confusion about when employees were supposed to claim UI, how they were supposed to claim UI. So everyone I've talked to there has been really great and really understanding and very willing to walk us through the problems that we've run into or the issues, and very understanding that it's very confusing information. So if you do have any questions, they're a great resource to reach out to as well. So we have a couple outstanding issues. Now, the deadline of March 31st, 2021 just pushes our same issue that we had at the end of the year forward. Our question was, is this for hours used up through March 31, 2021, or do the hours need to be paid as of March 31, 2021? Because it changes how it's reported on the 941. We had talked about running a special payroll as part of our year-end payroll update that we did a webinar on, and how we thought that might be the best option, because we still aren't quite sure how we're supposed to run this at the end of the quarter. We're hoping that they will have some guidance for us. I expect that we'll be able to pay March hours in April, but as of right now, we just don't know. So we're waiting on that. Definitely, to be safe, you could run a special payroll at the end of the quarter to make sure everything's included, but hopefully we'll get more information. And then what I mentioned earlier about the clarification on the expanded FMLA on renewal, it looks like if the employer's FMLA calendar renews between April 1st of 2020 and March 31st of 2021, they'll be eligible for another 12 weeks of the expanded FMLA, which is the first 2 weeks unpaid and then the 10 weeks paid at that 2/3 rate. We just need more guidance on that. So a couple items there. Tony, Jake, can either of you think of any other outstanding items I maybe didn't list here?
Nothing comes to mind on that. I mean, that's a lot of content there.
Yeah. So, and we're still seeing, I would say we're still seeing differing opinions online about different aspects of this, especially when we get into the ERC stuff. We're seeing some differing opinions on what is actually allowed. So definitely need more guidance. It's kind of been the same thing happening every month. We just need more guidance from the government. Whether we get it or not, we'll see, but I got my fingers crossed.
Sounds like a similar topic that we had on just about every other webinar, huh?
Exactly, definitely. Yeah. So now I'm going to throw it over to Jake to talk about the Paycheck Protection Program round number 2.
Awesome. Thanks, Erin. Great content, lots of it. Hopefully everyone hasn't gone cross-eyed yet. If you haven't, you will hear soon. So this is a timeline that the AICPA threw out to us, just a good starting point for our discussion surrounding round 2 of the PPP. As we all know, Congress got together, put together the new act that pushed through this second round, and the president signed it late in 2020. And so we now are eagerly awaiting guidance surrounding that, Treasury guidance, SBA guidance, to hopefully get better clarification on what all the rules are. We can see a lot of it, but inevitably more guidance is needed. And so then the next big question, of course, would be is, now that we know there's going to be a second round, when can we start applying? And so not only do we need the form, but then the idea of working with our local banks to start getting those loans pushed through. And so our feelers have been sent out. I think Erin said that she had a contact with one of the banks that were pushing out their ability to accept round 2 loans as early as next week. And that was kind of expected, probably sometime next week, but obviously I'd look to reach out to your banker soon if they haven't been reaching out already. It's going to be quick moving, but at the same time, we're at the mercy of just getting that final guidance needed. And then, like everything, just as Erin and Tony pointed out, and not only are we waiting first round of guidance, but then all the questions start coming in, all the, well, why didn't they do this or that will come out. And then yet a second round of guidance will come. And we usually predict that to be about a week after the dust settles from applications starting to go in. And so this is just a brief timeline, what to expect as we start going through this second round of PPP. This slide is really the majority of everything we're going to talk about with this second round of PPP. I just want to get everything out on the table. A couple of slides will address a couple of these specifically coming up. But the very first thing that I want to talk about that was eagerly awaited and such a delightful surprise to a lot of our businesses, not to a lot of them, all of them, and that is that the PPP, as well as the EIDL advances, will not be included in income. And that's just it's a victory for all businesses alike. Just the idea that the money was infused into the business. It was our intent. I was doing tax planning around including it in income. And now the Christmas present came at the end of the year saying, hey, it's not included in income. So that's the biggest thing we need to get out there. And not only for the PPP, but as the EIDL as well. I think every webinar you look back on, we've always said, yeah, but the EIDL was will possibly be taxable too. So that's a good thing, good note to start off with. The second thing involving the second round of PPP funding here is that make a note that there will be differences between the first and second time applicants. A lot of people on this call likely are second time applicants. But we do have a handful of people that this will be their first round of PPP funds. And so just be aware there are some nuances. If you read something online, if you hear something with us today, understand there could be a difference. That could be applicable to someone and not yourself, just because if you're a first or second time filer. So just want to make that comment. Third one. This one's pretty big too. So simplified loan forgiveness for loans under $150,000. If everyone remembers, we had the simplified application come out, but it was for $50,000 loans or less. It wasn't what we were hoping for, the 150 way back several months ago. They just did 50, but then now all of a sudden it becomes 150. So not only are we waiting on a new form, but note to all of you out there, either in the process of applying for forgiveness or soon to be applying, it could behoove you to wait for this form to come out. If your loan amount is under $150,000, it's a one-page, streamlined, no reduction in forgiveness page form. So super quick, super easy. Look for that. Question we're getting a lot right now that we know about this is, hey, Jake, hey, Erin, hey, Tony, I've got an application in, and maybe I'm only looking at 90% forgiveness for some reason, and my loan's at $100,000. What do I do? And so I would highly recommend you, if your bank hasn't already, contact them, see if you can't stop the processing of it. and then redact that out of there and then wait for this new form to come in. We haven't seen the form, so I can't push you to a form or anything or a link, but in all likelihood, it sounds like it's a one-page, streamlined, flat forgiveness form. So that's something to keep all on our radar as we move forward. And note for these second round, your second round of PPP funds, if you're under $150,000, remember there will be a form, a one-pager, streamlined. Once you spend that money, send it in on that form. Next point, deductibility of expenses has been clarified. So if we go way back to the beginning, back in March, Treasury instantly announced that, hey, when this money comes out, just remember if these dollars are forgiven under a certain tax code section, you can't deduct something that you get loan forgiveness on, or that money was essentially non-taxable to you, or was not taxable to you. And so, to make a long story short here, not only are your funds that were forgiven non-taxable, but the expenses you use those funds for are deductible. It's a twofer. It's a huge, yet another victory, Business Pro victory. So just be mindful that that's a little bonus that came through as well, because there was some uncertainty on if we get this loan forgiven, then we can't deduct the expense. And so just know that when you use the money appropriately for a valid business expense, it now is deductible. The EIDL advances, kind of touched on that earlier about how they're not taxable, but also yet another victory here is that when business A went in for their PPP loan, at the same time they applied for an EIDL, this is what back in March, April last year, and they got their $50,000 PPP loan, and they got a $10,000 EIDL advance. Well, if you were watching our webinars, looking online, you would know that when you went to apply for forgiveness of that PPP loan, you could only be forgiven to the extent you didn't get an EIDL. So the advance would actually reduce your forgiveness. So you'd only be forgiven $40,000 of that PPP loan, essentially making that $10,000 EIDL advance a loan. And they did away with that. So not only is your PPP loan potentially going to be fully forgiven, you no longer have to reduce that forgiveness by your EIDL advance. And again, that EIDL, not income. So great victories there. The second to last bullet point, I'd love to go deeper in on this, but it's a little bit of a one-off, but I encourage if you are a rancher or farmer out there, or if you know a rancher or a farmer that they do their own taxes, tell them to reach out, because this is a fun one here. And so essentially these new loan the new loan calculations for farmers, because they were the majority of them were so much affected in 2020, we're going to actually be able to not go to their bottom line or their wages for calculations of the new loan, but they can go straight to gross revenues. And so I've completely summed that up way too short. It deserves so much more attention. But I highly encourage you, if you have a connection with someone or you are someone that this applies to, talk to your tax advisor, reach out to us. We need to assess that. There's significant dollars that are available for you. Very beneficial stuff. And then the final comment, just another good thing to see in the code and the new act, and that is that there's specific dollars set aside for small borrowers. Small borrowers were deemed as 10 employees or less, the mom and pop shops. Great to see written in the code. It's hopefully going to prevent that mass bogging down the bank system out of fear that you're not going to get your money. That was one of the big issues, I think, at first. It was a first come, first serve, and that's why we had kind of two rounds. We had two stints of the first round of PPP funding, because it went so fast, and then they did another set. And so this is just kind of trying to tell people, hey, the money is going to be available. They did the math and they said, all those businesses, we are carving out a specific section for you to make sure you're funded. So that's the overall breakdown. Tony, Aaron, comments on that before I start going into a little bit on a couple more fine details. Any questions I can answer, you think, off the cuff here?
We've got quite a few questions coming in. I think some are going to be answered over the next couple of slides.
Okay.
So maybe we'll hold off.
Okay.
But Aaron, do you want to just maybe take that first one? How do we code the PPP and EIDL loan in QuickBooks since it's not income now?
So you will still, and you two chime in as well in case you would do something different. But I would still record it as an other income item down at the bottom because it's not a liability and it's not, I mean, it's cash. So it's in your checking account asset. But it should go down like below all of your operating expenses. So in QuickBooks, there's an option to set up an other income type. So it is separate from all of your operating stuff. And then it's easy for your tax preparer to pull out and know like, okay, that's other. I still have all my expenses in the operating area, but I've got my PPP and my idle down at the bottom. So that's where I would put it.
Yeah, just so it's separately identifiable and easy to pick out. That's really the point. So, yeah.
And then I did have one, this isn't a question, but about the idle advances no longer reducing loan forgiveness. I know that we definitely had clients that had submitted their forgiveness application, got it forgiven at the bank, and then the SBA sent them a letter saying, hey, you got the EIDL loan advance, you have to pay this back with interest. And so they did so. I have not seen any provisions for what's going to happen with that. Have either of you?
Yeah, they are. They specifically have said that they're going to make borrowers whole. So this is all going to be retroactive. So if you've already been forgiven and they've set your loan and they've reduced your forgiveness by the EIDL, they are working on the protocol to make you whole, including any interest that you might have paid on that EIDL piece.
Great. Awesome. Thanks, Tony.
So I'll jump back in here. I'm thinking this might help with a couple of questions that came in, Tony. So this slide is going to talk about the requirements to be eligible for this second round of PPP funding. And as you'll notice that there's two different sets of circumstances, not big differences, but just good noteworthy items to know that if this is your first time to apply for the first time draw on the PPP, I say first time apply and then I change it to first time draw. You could have applied the first time and then maybe redacted it or pulled it out. So just want to note that if this is your first draw, essentially what you're limited to is you had to have been in operation before February 15th, 2020 and had fewer than 500 employees. So probably around here, probably pretty applicable if that is the case that you're going to qualify as long as you were operating as of that February 15, 2020 date. If this is your second round, same date requirement, you had to have been in business as of February 15th, 2020. Smaller employee size limit there. So you had to have 300 employees or fewer. Small comment with per location. There's some rules surrounding if you have multiple locations. So it's probably your larger companies there that's applying to. And then this one's the most important. This is the revenue provision here. This is what is going to kind of weed out, sort of speak, from the businesses that got out the first round, weren't really sure what was going on. Maybe business was affected, maybe it wasn't. And so this is what's going to kind of prevent everyone just to get more money. And they're really dialing in on those that were affected by COVID, obviously. And so they've bright lined it for us, and they said, you must show a decrease in your gross revenues of 25% or more for any quarter in 2020 as compared to that same quarter of the following year in 2019. So a lot of analysis that I personally have been doing as this has come out and looking at and working with clients. I'm just jumping right to Q2 of 2020, but obviously you can look at any quarter, and very common Q2 of 2020 is lower just because everyone was either under lockdown or whatnot. We're comparing it to 2019, and sure enough, they're at 25, 30, 35% reduction. So right there, that qualifies them for this revenue qualifier. So revenue decrease of 25% or more for any quarter in 2020 as compared to the same quarter. And then another little comment is that you must have used or will use all the funds from that first draw of PPP. So they're just trying to make sure that people aren't sitting on that PPP money. Then you technically don't need a second round. Most people, I think, have blown through that. So another just very small comment here is that this still is applying not just to LLCs and S corporations and C corporation, but this is also applying to your sole proprietorships, single member entities. They've expanded it a little bit now. Some 501c6 nonprofits, as long as there's not too much lobbying going on, they're going to now qualify. So nitty gritty details there. We won't go into here, but they're trying to expand it a little bit more to make sure it casts the net over all of those businesses.
And Jake,
go ahead, Tony.
sorry, Jake, just a comment on the gross revenue. That is still an open question of whether it's a cash basis collections or your normal recognition of revenue, which might be accrual. Correct? Sure. We're still, that's a big question that's still out there.
Gotcha. Okay. Yeah, I'll leave it at that. I was going to make this hypothetical guess just from I'm just thinking how we're going to have to provide that data. I'm running a report on their cash or accrual basis and doing a quick comparison. Boy, I would hate to think that they're going to make us do anything different than that, but that's a great comment. Yet one of those guidance coming, hopefully, if not today, very soon, to clarify some of those points. Thanks, Tony. And then again, this slide pretty similar to the last one that's breaking out first and second time draw businesses here, and this just kind of talks about what the size of your loan will be. Very similar fact patterns. If you were a first time recipient of the PPP, you'll remember that 2.5 time multiplier. Essentially, you had to look back to your previous year's wages, and then it was the 2.5 time that was the multiplier. Determine your loan size, and so very similar sets here. And now what they're doing though is there's a little bit of an optional piece to it. So remember, we're applying now in 2021. So not only could you say, okay, let's go back to 2019 to do our multiplier, you also have the option to look at your 2020 numbers. Chances are, I have yet to do this calculation too much yet, but I think we're going to see that the 2019 numbers will be higher. It seems to me that if they are higher in 2020, that business might have been more successful unless you expanded your business. That would be kind of the one thing. And so would you actually qualify under the gross receipts method? Not sure. So kind of more hypothetical speaking there, but just a note that's how you're going to calculate it. Industry codes starting with 72. So NAICS code 72 basically are your restaurants, casinos, bars, hotels that they're specifically targeting and saying, hey, your multiplier is going to be 3.5. So they're looking to infuse a little bit more money into that area. And I think I'll leave it at that for this section. Couple little nuances in the overall max size for first time and second time, but we don't need to go into that too much. Any questions, Tony, related to this? Got a couple more slides on covered expenses and period, but
yeah, I mean, there's quite a few questions in the queue. I don't know if you want to cruise through these next slides, and we'll take
certainly
a few minutes.
Can. Yeah. Yep. This is just I cannot take any credit for this. This has been this is Aaron's little creation here. It's amazing. If you can go to our website after we record this and post it, you can get the slides. You can actually see this slide when you zoom in on it once you print it out or look at it online. Great way to just kind of see if you qualify for the second round of the PPP money. Just kind of a little walkthrough fact pattern set. So thank you, Aaron, for creating that to help some of us who are challenged with deciphering IRS tax code. You put it into a picture format. I love it. Two more slides left for me, Tony. I can go through these pretty quick. Covered expenses. We all remember that it's payroll expenses. There's a couple definitions inside payroll expenses that you can use to use the funds with. So payroll, your business loan mortgage interest was eligible to be used with this money, rent and utilities, and they've expanded this definition as now we are aware of some of the expenses people are incurring because of COVID. And so certain operational expenditures, property damage costs, certain supplier costs, and then some protective expenditures are included on that. The 60-40 rule still applies, so you must use at least 60% of your PPP proceeds towards wages, hence Paycheck Protection Program. And then the final item I'll talk about, for those of you that recall getting that first round of PPP, it was a 2.5 multiplier of your payroll, and you had 8 weeks to spend it. And so all of a sudden you thought, well, okay, it's going to be payroll plus maybe rent or utilities. And so then we all kind of said, oh, geez, that's getting tough to spend the money. And then they expanded to 24 weeks. And so you'll see these numbers here in this second round PPP funding, and that is that you actually have the choice to use 8 or 24 or anywhere in between. So if it takes you 10 weeks, 12 weeks, 11.5 weeks, you decide what that period is for you that works, and that's what you're going to submit on that application that you submit for loan forgiveness for this second round. And so we're kind of working on a couple, maybe there's some strategy around what the length of your time frame will be. Tony's going to talk about the credit here coming up. Maybe how does that work hand in hand with that? So, but this is just an idea on how long you have to spend the money, and lots of flexibility there. So we should be in good shape. And if I'm happy to answer questions here, Tony, and any other comments from you guys.
Yeah, well, why don't we just fire a couple of questions? I'm going to squeeze Aaron on the ERC down to, if we give you 10 minutes, Aaron, is that good?
I'll do my best.
Okay. So what if Q2 revenue was down the 25%, but then Q4 was an increase? Are you eligible for a second round of PPP?
Yes. Yep.
Yeah.
Just got to satisfy that test for one quarter fact pattern. Yep.
So next one is, will you be a first-time recipient of PPP? Does the 25% reduction to first-time payers, recipients?
No, doesn't apply. If you're a first-time filer for this, you just had to have been in business by February 15, 2020.
Yep. Next one, it was they got a PPP loan for over 150. In this case, 225. They're going to ask for forgiveness of only 150. Can they use the simplified approach and file on the one form, the new form that's coming out? And I think we're scratching our heads a little bit, but I think the answer is the eligibility was the amount of your PPP loan.
I would agree. That was where I was going to go with that too. So I would say no in that case.
Yeah, we are totally guessing on that. That's a non-authoritative answer.
Yeah, thank you. Yes, Tony. Good clarity.
But we'd have to wait and see once that form comes out. But probably who may use this form would be dictated based off of your PPP loan size. So.
Yeah, I think it is. I think that would be right.
Okay. So I am going to say, let's go ahead and go forward on the next section.
Okay.
And I think I'll try and consolidate some of these remaining questions a little bit.
Sounds good.
Great. So I'm actually going to talk a little bit about the employee retention credit and then the payroll tax deferral just real quickly. Originally, the employee retention credit was refundable tax credit on 50% of qualified wages paid between March 13th and December 31, 2020, limited to the first $10,000 of wages per employee for that March 31st through December 31 period, with a $5,000 max credit per employee. You had to be eligible, you had to have a partial or fully suspended business due to governmental orders, or experience a significant decline in gross receipts during the calendar quarter. And we had a whole little table that we'll go to next to show how that gross receipts decline worked. The credit was then reconciled on the 941. It would reduce the amount that was owed on the 941, and then the excess would be refunded. You could also request a 7200 form that would get you the refund earlier. Most clients, I would say, got the credit just on the 941 and received the check for it. So that's the original employee retention credit. Here, this was a graph or a table that Jake had set up way back in April, probably when we were talking about this, that showed the decline. It has to be 50% or more for that first quarter. So in this one, quarter one sales were down by 48%. So they would get, but their sales were only 48% of the prior year's quarter sales. So they were eligible for quarter one, and then they bumped up above 80%. So they were eligible for quarter one, quarter two, but no more. In this case, the quarter two was not above 80%, and they went above 80% in quarter three. So they were eligible for 3 quarters worth of credit. Still in place for 2020. Now, this is super small and super messy. Again, we'll have these slides available for download. This is a game of chutes and ladders a bit, as what Brenda called it, because there are so many different variables and how you pay the wages, how many employees you have. And this specifically is for 2020. So luckily, they've made it a bit easier for us in 2021. But if you have any questions about the credit for 2020, please contact your contact at JCCS. We can help you work through this. The big change of why we're talking about this is because the Consolidated Appropriations Act made it so that PPP recipients are now eligible to get the employee retention credit, which originally precluded you from getting the credit. So before, we had just said, all right, you got a PPP, you don't get any credit. Well, now you may have some wages that would have qualified you for the ERC if you had one of these reasons. So it's pretty complex. It'll probably involve amending quarter two, quarter three, and potentially quarter four returns. If you had a reduction in your revenue from of 50% or more in any of those quarters, definitely talk to us separate from this. It's pretty complicated and calculating it out. Or you had the closure, which in Montana, we were closed from March 28th to April 16th, I think. I have a slide with it later, but you may want to talk about using it, and we'll go into, I have a slide about that as well. So, oh, here we go, 26th, not 16th, April 26th. So that's for 2020. You had your gross receipts reduction or the suspension due to governmental orders. Now they expanded the credit through June 30 of 2021. So you can still take the credit. They changed the reduction of revenue from 50% to 20%. So this applies to a lot more of our clients. They also changed how they figured the $10,000 limit on employees. It's no longer for the year, it's for each quarter. And they changed that credit from 50% credit rate to 70%. So if you paid qualified wages of $10,000 in a quarter to one employee, you would get a credit of $7,000 instead of $5,000. It also changed the increase in number of employees delineation and how you figured that out. Originally, if you had over 100 employees and people were being paid to work, those wages wouldn't qualify. It was only the wages that you paid to employees that were staying home, and they increased that to 300 employees. So definitely great to hear that they removed the PPP preclusion from the credit. They increased the amount of the credit. They decreased the revenue requirement. So some really great stuff that they did. Unfortunately, it's going to take a lot of work to figure out if people qualify. So you may get some questions from whoever your contact is at JCCS, or reach out to us if you think you might qualify. We can help you figure it out. Like I said, it might take some amending of some returns, but we can do it. I definitely think it's worth it. We do have another flow chart that, again, is pretty hard to see because it's small, but this is for 2021. You can tell it's significantly easier to figure out than the 2020 form, I should say. So they made it a lot easier. I wish they had kind of retroactively changed a lot of the 2020 stuff, but kind of taking the hand we're dealt here. So lastly, the payroll tax deferral is something that very few employers took advantage of for their employees. I know of only one employer or one client that actually did it other than the federal government. And this is the act or the deferral that the president signed back at the very end of August. And it was an option for employees to elect to defer their Social Security tax for September 1 through the end of the year. And then they would have to pay it back between January and April of 2021. Well, the Appropriations Act extended that, so the payback time is now the full year of 2021, and it gives more time for the employers to remit that money to the government. This wasn't very popular because there's still not a lot of relief for employers who did take part in this, whose employees have now left and they were unable to collect that money because the employer is on the hook for that Social Security tax. So we really didn't have a lot of employers using it. We weren't recommending it just due to the level of risk. But if you did, you do have an extension on collecting those funds from employees. I would still do it sooner rather than later, just because you don't know how long that employee might stay with you. But that's the payroll tax deferral, kind of quick and dirty on that. So any questions specific about this, or do we want to try to get some of the PPP questions answered?
There are definitely some questions that are coming in here. Let me see if we've got.
I see an easy one.
Okay, why don't you take it
The
then?
very last one, could you clarify partial suspension of operations? For example, restaurants, bars, casinos operating at limited capacity in latter half of 2020, would this qualify? I think it qualifies because you're partially suspended from operating at full capacity. So if you had to cut your dining room in half, you could only do 50% of the dining room. That's, to me, partial suspension.
Definitely.
The top question asks, a banker told someone that round one needs to be forgiven before you can apply for round two. I don't think I couldn't point to something that says anything like that. I think it might be just on a bank by bank case. They may.
I've heard specifically on that, Jake,
okay.
And that is a misconception on the bank's part. The AICPA has specifically indicated that round one does not need to be forgiven and tied off before you apply and receive round two. You have to have spent or will have spent all
Right.
of round one to be eligible, but you don't have to go through all the forgiveness process. I
Sure.
think what we're going to see is that's going to be a limitation in the systems of the bank. So if you're working with a bank that's inflexible on that, you reach out to us. There's a lot of, other institutions such as fintechs that will process an online application and direct deposit your funds in your bank. So if you're having problems with your local bank, there are other options on that. So.
The next answer on top there asks what happens when you apply for your PPP forgiveness for round one, but you don't receive the forgiveness letter by year end. Should you count it in your financial statement for year end? The answer is that A, don't forget it's non-taxable, which is nice, and B, yes, you do count it. You report what you assume will happen or what you suspect will happen. So if you applied for 100% forgiveness of a $50,000 loan, that's what you would report as of the year end. So that there's the answer there.
Yeah, and they actually have some options too, Jake. That is one option. It kind of depends on your accounting policy a little bit. You can also go to the facts and circumstances, and you can defer. You can leave it as a liability until you receive the letter. So you won't be faulted for either.
I think before, originally, when the expenses were not going to be deductible, they were saying, hey, if you expect to receive full forgiveness, then you cannot deduct any of the expenses. And I think that has somewhat shifted. So that's kind of where that's coming from.
Should hopefully not matter now.
Yeah. I'll take I think I know the answer to this next one. With the workers' comp insurance payments be considered part of payroll? I have not seen any change in the definition of payroll costs or payroll expenses to include workers' comp. Have either of you?
I have not seen a change for that specific item.
Right.
No.
Yeah, workers' comp insurance is not a covered expense, as far as I know.
Or used for the calculation of the loan amount.
Yeah.
Correct.
Okay.
Yeah.
I hadn't seen anything. I was pretty sure they kept it the same, but it's like maybe one of you two saw something.
There's a couple of questions in here about how do you calculate the 25% decrease? A couple of questions, do you include work in process? Is it accrual basis? Is it cash collections? I don't know, Jake, do you want to comment on how to calculate the 25% decrease on what we know?
Yeah, I believe it would be you go to your total gross receipts and simply compare that amount. So one item that I have outstanding that I haven't read specifically yet would be, for example, do you include maybe some discounts and refunds that you would give or had given? Would you really need to? That's usually a very small percent, and would that actually make you go to 24%? I don't know. So my first comment would be, are they going off of line 1A, or are they going off of the kind of the net gross amount? So I personally haven't read something on that. I could have overlooked that in the act, but there's that item. But I think in general, it's you look at that gross amount and you compare it to that prior quarter, and it's as simple as doing that math. What are they going to want from us, I think, is another question. Are they going to actually want us to show them this comparative financial? I mean, that's what I would think they want, and we should be supplying. So that would be what I would suggest at this time to start preparing.
Yep. Got a question that's unrelated a little bit, but state of Montana COVID grants, are those income? And yes, they are. The state and local business grants, those are counted as income. That's included in the, there's a revenue ruling out on that and included in the CARES Act FAQs. So yep, we do have a definitive answer there.
Yep. PPP forgiveness, they applied over 3 months ago. What happens if we don't get an official forgiveness letter? I've only seen emails from the SBA. I guess I haven't seen like a full-blown official letter yet. Do you two have you guys seen any official documentation? I don't think there is it's all SBA, so I can't imagine it's an IRS letter anyone's going to get. But are they issuing full-blown acknowledgement letters?
Yes, they are. If we're only 90 days out, we're still actually technically within the window, because I believe the bank gets 60 days and the SBA gets 90.
Right.
If I remember correctly. So a little surprised if you have applied 90 days ago, you haven't heard, but technically they're still within their window and you should receive a letter. So
great.
Or you should receive notification.
And I think maybe that question, I'm not sure what the question is kind of also getting at is, are they wondering to file a tax return? Whether the question probably would have been, what do we do as far as how much we include in income, how much we put on our financial statement? And we've kind of addressed that. So, yeah. Yep.
I want to take this next one with applying for the first draw now, spending the funds, and then applying for a second draw thereafter. So that absolutely is allowable under this second round of PPP. And one of the main reasons they put the provision in that you have to have spent your first draw before you're eligible for a second draw is so people didn't apply on top of each other, first draw, second draw. So they definitely see that is possible under the act of getting 2 draws. But yeah, you have to have spent the first one. And then if there's funds left over and the time period is still open to apply, you could apply for that second draw.
Can PPP funds just be used for payroll? Yes, definitely.
I would add a caveat though. Is it best for the PPP to be used by all payroll if you're eligible for the employee retention credit?
Good question.
Maybe think about that.
Right.
Yeah.
So, oh, go ahead, Tony. Yeah.
No, go ahead. You were gonna.
Yeah, I was just going to say, yeah, because I mean, that's going back to, how long what's your covered period? How quickly do you want to try to say, okay, we use 60% of wages. Do you have rent to support it? Do you have business loans? Can you figure out a way to quickly unload all of your PPP funds and then stop saying you spent that money on wages and then switch over to the credit? I would think that that's going to be an attempt at trying to optimize.
Or get the ERC if you had reduction in gross receipts. Get the employee retention credit for like January, February, hope the loan amount, like hope that the loans are still available and all the funds aren't used. Get that like February, March, then get the ERC for quarter two. Like there's potentially a lot of different ways you could optimize this. But I will say the banks really like it when you use all payroll because it's very easy for them to verify. There's no question. Like you provide payroll tax returns and they're like, oh, perfect. This shows what I need. So the banks really like the payroll. Whether it's the best solution, maybe.
Yeah. So we still have quite a few questions in the Q&A, but we're going to have to cut off here pretty soon. Is there anything else in there that you see that we have not addressed?
Just a reminder that the slides will be on our website when we get the recording up as well, so you can download the slides there.
Yeah, I think we've pretty much touched on most of these questions. There may be some elements that you didn't get answered individually. So again, please feel free to reach out to us and we can probably have a little bit lengthier conversation on your particular situation and get those questions answered for you. So again, want to thank you for taking an hour and 8 minutes out of your day. Hopefully you got some good information. There is some pretty meaty content in there. So definitely look for those slides and a recording of this if you need to review those, and obviously just reach out to us if you've got some clarifying questions that are needed. And then look for all the business and individual tax provisions coming soon, probably later this month, maybe in a week or so. So anyways, thank you everybody and have a great afternoon.
Thanks everyone. Happy New Year.